Good morning, it's Ken Long at Tortoise Capital for the weekend report review for May 26, 2018. Market has moved into bullish quiet conditions. On an annual basis, using NDX 260, we're at the higher end of neutral at 72 out of 100. On a 10-day basis, the shorter term condition is also right smack dab in the middle of neutral at 50 on the NDX 10. Looking at the market mosaic, price with respect to the 200-day moving average is yellow bullish at 3.38%. Slope of the 50 has slightly improved to yellow bearish at minus 0.12. ADX is in non-trending or a weak trending 13.3. The risk index is the 30-period moving average of the VIX compared to or divided by the 10 period. 1.0 is the boundary between risk on and risk off. The current reading is at 1.105, so we are in risk on conditions, but declining as you see here on the histogram. We compute the z-score by looking at the risk index number, looking to the last 5,000 trading days, finding the average and the standard deviation, and computing the z-score, which is at 1.07. So that means we're 1.07 standard deviations above the long-term average and declining. So this is a time in which the swing trade profits you have should be protected. We're moving back towards a riskier volatility regime, which could feature a higher probability of one-day short-term volatility events. So that will cause us to be even more prepared for day trading or short-term swing trading. But for now, there's still an upward bias to this market. See the current holdings for blended monthly rebalancing. In the current leaders, you see the ones that are at the top of their respective portfolios based on the closing prices on Friday. Theoretical exposure in ETF2 dropped to 50% from 80% as there has been some stalling and backfilling across the world. Quick look at some of the BMR portfolios, the ETF 13, about half and half on buy versus cash. All of the U.S. symbols are at the top, leading the way is small caps, followed by technology. I think those are the two really to concentrate on. Technology had some strength, as you notice in this past week and month. Latin America continues to lag. In ETF 32, again, about half and half. Saw some rebounds here in treasuries and materials, and Asia less Japan. But at the top of the stack, energy, commodities, Russell, technology. Still weakness here in Latin America and Brazil across the board. In the Dow 30, in the Dow 30. Intel, Nike, Microsoft, Merck all had good weeks, along with McDonald's. This may be a turnaround play here in McDonald's, as it's been underperforming, but is starting to show some current strength. It was above average, and then well above average on the 1 month and then the 1 week. So I like to see that. I like to see that in Microsoft as well, and in Intel. So just off of this report, the three I'd be looking at on the positive momentum side would be Intel, Microsoft, maybe Merck, and McDonald's. Looking at possibility of a overreaction here in Chevron, which is kind of the anomaly. You've seen strength in energy, but Chevron really took a punch in the face, so that's of interest to us. All right, in the sector spiders, oil and gas exploration took a big smack, and the energy sector itself. So maybe the big pullback after a period of outperformance. On a relative strength basis, they're still near the top, but this either is a turning point or a buying of quality opportunity. We'll see how that works out. Interesting developments, transportation, tech, and biotech here. with outperformance on 1 month, still positive on the 1 week, and room to grow based on above average on those percentages. This may be the next generation of leaders moving towards the top. Home builders and staples still getting smashed. In the ETF Max, these are the out of the database of 500 ETFs, the top performers on the blended performance. And then this is typical behavior of significant turning points. Looking at the market health check, the vertical blue lines are 10, 20, and 30 days of look back. We've got some support levels here at the bottom of the dragon and bottom of the dragon at the prices noted. I've highlighted this region in yellow here as to me, that's an important support level. It reflected the range between the top of the dragon here and the bottom there. I see that as a noise barrier. And as long as it's above that range and the 10 is tilting up, the 10 period graph regression channel is tilting up, we're in good shape. That's supported by a rising 200. The PSAR indicating to the long side. We've got to get through this hump of the dragon here at 276 to really have a run at the all-time high up here. So still cautiously optimistic, but it's had 10 days to do something. It's been comfortable here, but hasn't really breached this level. We're close to the long-term fair value, and we're just starting to get an upward pulse. Notice we had a pinch condition here in the pinch of the Z3 lines, which voted to the upside. So we got one burst up, and it's holding. Still cautiously optimistic. If we look at the simplified MACD histogram here, the 10, 30, and 5, the signal line is above the zero line, so we have a long side bias across the zero line here. We started stalking that long side play with an owl down in here. But we've had one leg up, and it's merged back to its 5-period exponential. And what this says is we're at a decision point. Are we going to get a third leg up? We're just going to continue to decay and come back to the Bollinger Band mean. So that's really where there's still a slight upward bias. We should buy new daily highs, prepare for 2-hour battle drill at this intermediate target, and certainly be long with money in hand if it gets through here and is moving towards a retest. So cautiously optimistic here. ETF2 regional report. 5 of the 10 indexes are on cash. 5 are on bias. We're at 50-50, down from 80-20. Bullish quiet. The S&P at 49 is better world. The rest of the world at 20. Among the U.S. indexes, it's technology, large caps, small caps, mids. Weakness here in energy and healthcare. World market model. The U.S. first. Technology has been dominating. Below average performance otherwise. Mixed bag in Asia, shifting to Taiwan, Korea, and Philippines. Pretty much below average in Europe all the way across the board. Brazil really suffering. Has been a great intraday trade for the turbo swing traders in the chat room, making excellent gains in that area. ETF top 30 with our little cheat sheet on the bottom here. See how that goes. Lining up current strength. So XLB and XLI are green and white. That's the first ones I look at. Those were things that you see they're doing great, current leaders. Green and white means that it was good, white, and is now great on the green current strength. So I want to exploit new strength. I'm definitely ready to turbo trade those, and I'm excited because these are new leaders. And that's how you read and interpret these colors on this chart. the rest for you to develop. Now this is really interesting here. Minimum volatility index fund. I mean, we're coming out of a period of horrible volatility, and maybe that's why that's red, and low volatility lately. In Bitcoin is why that's amazing. I'm going to have to start looking at that one. Just ETF liquidity stats for the top 30 based on daily dollar volume. EFA on both channeling and overreaction. The usual suspects here for the 10-day max pains. I like those targets. Tactical summary for the Dow. Half a dozen dojis. Lots on the auto framer to choose from. Weakness this past Friday for ExxonMobil and Chevron. The strength was in United Health, Intel, and Procter. ETF 30. Again, many dojis, lots of channeling and overreactions to choose from. A triple screen and a 551W in XOP, oil exploration. And as you can see, Brazil's just been getting smoked across the board and had a breakdown 10-day, 1 month, 3 month, and 6 month new lows for Brazil as it's cracking. If it 37.50 was the critical state price, and it seems to be voting down, so I'll be looking to pile on Brazil. In the most positive Z stretches, none of them are in the green, so this has been a period of quietude and settling back around the norm for these ones that are on the upside. There's still a considerable number that have stretched below. These are the ones that are physically breaking down right now and looking to go lower. Latin America, Brazil, Mexico, these are lucrative times for the intraday turbo trade. The most expanded pinch boxes, these are the ones that have the longer term directional moves, which is how you get a wide river. And so that's really the ones that are in the strength of trend, and you see how strong those negative trends are in Brazil and Mexico. So even though it's in the green, what that means is it's 3.5 standard deviations wider than the long-term normal, and you only get that by having a really strong 30-day directional move. Let's see what that looks like. All right, so this is what that looks like in Mexico, EWW. You see that we've been trading this thing on the long side. Had a couple long entries and then cashed and then stopped and reversed. Added a second position in the pocket. Missed the third entry here, bad form, and is coming back to our support level here. And you notice that's paralleled in the MACD histogram very nicely. That run is done. We're getting a P1 formation down in here. Notice how wide that divergence is, and the fact that this is now pinching just says that maybe this run is done. And it started off in pinch conditions here, and then has just been expanding ever since. That's how wide that river is. So if we were to go back further in time, you just see how wide this this river is. Now you can see how wide that Z3 and how wide the river is compared to some pinch conditions. And so when you see a large stretch number, when you see this 3.41, that just means that it has already experienced this extraordinarily large directional move. Well, those are either going to continue and you can play the momentum to continue, or those become owl opportunities, because these are all unambiguous moves in one direction or another. That's how we use that. Now, the most compressed pinch boxes are at the other end. These are the ones that are extraordinarily narrowly pinched. So let's take a look at EFA, because that was a channeling and an overreaction. So let's just see what that looks like, EFA. And so you notice there was a pinch here, voted to the upside. That's that C3 breakout. That rollover occurs. Notice the usefulness of this indicator. It tells you when that extraordinary run is done. You can think about getting short and the move back to the Bollinger Band mean, which continues. Now that run is over. When you get this crossover, you can pick up a long bias officially here, which equates to here. And now this run feels like it's done because that's rolling over. So what I want you to notice is simply the extraordinarily tight pinch box here. The pinch of the river is one standard deviation below the long-term normal. So in the same way that this pinch here signaled the potential of a explosive directional move, which we got here using and how do you like that PSAR as a nice tight stop? Or even the belly of the dragon. Nice. So that's how you can use this chart to identify things based on their life cycle. So now these three symbols have a combination of tightly pinched river and all four of the regression lines tightly compressed as well. Let's take a look at one of those just for the heck of it, PSP. All right, so this is an example of that super pinch. What you have is first the pinch of the Z3 lines and the river and all that is very tightly compressed. Now you have a super pinch because the RL270, the 90, the 30, and the 10 are all tightly grouped together around that Bollinger Band mean, and that this is a symbol that is poised to explode. And the last time it did something like that out of a super pinch, it had this breakout to the upside, followed by the normal ritual response. So I hope you see the connection between this MACD histogram, the simplified version of the chart, and then some of the technical pieces that we add here. All right, moving on. Lots to choose from in the auto framer. And the regression line fractals. Plenty of targets to choose from that are better than 2 to 1 on the test. Let's just take a look at Cisco while we're here. So Cisco's a 5 to 1 on a test of the 10-day high. That's up here. Very tightly compressed range. So if we wanted to frame that out in the usual way, I'd put my stop just below that RL10. You could do it right below the, couple cents below that. You'd be fine. And my target of the RL10 here. So you can see we got a really nice reward to risk ratio if this thing breaks out to the upside. This is one where on the downside I'd be more than happy to play the breakdown. If it broke below this, I would be short, and my target would be down here to the RL10 belly, and then if that broke, this is where I'd look to add a second position targeting the 270. Okay. Daily squeezes, again, a lot to choose from here. These are all symbols that have been very tightly compressed on Friday's prices, but have had a relatively wide set of average ranges. So if you get a breakout from the tight range, almost like an uncoiling spring, you're ready for a single intraday pop, and this is what that reward to risk ratio is of the range risk divided by the reasonable intraday move. You can see in the market mosaic the tightly compressed price action lately, stabilizing here. The slope of the 30 still above average, but hovering right along the long-term normal. It's just been a period of quietude and stabilization, but we're coming to, again, a checkpoint or a critical state. Are we going to get a resumption, or are we going to get a collapse? And if it breaks below here, then look out below. Market mosaic showing the same things. The last chart I want to look at, the z-scores of the regression line slopes. Now, I want you to notice the amplitude of the 10 is compressing. So that's what we're seeing, is a reduction of this volatility from this after this Trump bump. Big explosions, almost like ripples in a pond. And this was that first vote to the upside and stabilizing at the edge of the river. And that's why I'm cautiously optimistic, because we do have an upward tilt to this, and the last move was positive, and we're near a resistance level, and we have failed to fail further. So that's the case for the upside. The 90 has turned, and so that tells you the fear has left the building and starting to get a upside bias, and looking for a reason to go. And that's everything I wanted to cover. This is Ken at Tortoise Capital. Keep your risk measured and powder dry. This weekend's advanced swing trading question and answer session is going to have a very interesting presentation on a structured approach to framing trades that will help you systematize and standardize and add discipline to your trading process. So, looking forward to that discussion with our members. This is Ken at Tortoise Capital. Keep your risk measured and your powder dry.